I'm going to start recording. Very good. Well, happy Tuesday. Today is February 15th, and we are recording this session because we're so excited to have Kate here today to talk about bookkeeping. But before we do that, we wanted to talk a minute about NBDA, so the New Mexico Minority Business Development Agency. I'm going to share my screen so you guys know who we are and what we do. So the New Mexico Minority Business Development Agency has been in the state of New Mexico since 2020, and we're so excited to be supporting businesses. And in this iteration, we're providing free webinars for business owners, and then they have an opportunity to then follow up and get one-on-one free sessions with the amazing accountant we have speaking about the topic today. So we are so grateful. And then in the coming weeks, I want to show a quick slide, and it's all on our website as well. We have all of these webinars coming up. Next week, we have about business plan. The following week, about bookkeeping again. Then we're going to have a webinar on how to become ready to do work with the film industry, then about social media. Anyways, many workshops to come. And if anyone has any questions or they want to work with NBDA more closely, please reach out to our website, and it has an inquiry form, newmexiconbda.com, and I'll also put it in the chat. And then, of course, you can call myself, Gabriela Marquez, Center Director, or any of our business advisors to support you. So thank you so much for being here. We really appreciate your time. And now I'll pass it over to Adriana Castillo with West.
Hello, everyone. I am excited to be here with you. I'm sure MBDA this training is going to be amazing. My name is Adriana Castillo, and I am part of West, which is a women center in New Mexico. We offer consulting, coaching, and trainings to help you, like you're going to do in this training, to grow your business, be more profitable, have more clients, reach more sales. Yeah, that is us, and I'm super happy to be here. I'm pretty sure this is going to be an amazing training for you.
Thank you so much, Adriana. Now I'm going to have David with SBTC to share.
All right, hello, and good to see familiar faces. Adriana, long time no see. The last time I saw you was when I was at Wells Fargo, right? But anyways, I'm part of the SBDC. I'm a business advisor, and we cover Doña Ana all the way to Truth or Consequences, which is sitting at counties. And you can see we have 18 centers throughout New Mexico, over 1,000 centers, centers throughout the United States. What we do is we provide free technical assistance, which involves, from creating a business plan, working on projections, anything that's under, that you can think about business, we can assist. And I mean, speaking of, we teamed up with West and Las Cruces. I know that Joanne works very closely out there with Humberto. So the more organizations, the better for our clients, because the more resources they have, it's better for them. We're more on the educational side, so we can assist. We can work on the projections for West, for the lift fund, for anybody that wants to send them over our way. We do all the legwork, do the resource, we do we help the clients with their business plans and do the market analysis. Once we're done with their package and their business plan and their projections, we can send them back over to either West or to the lift fund, whoever we're working with, So that's the great part about our organization, that we're in the educational side. We can assist our clients with you name it, anything with business. We help them register their business at no cost. Basically, they just have to pay for the services to register through the state. But we got industry reports that we can assist our clients with to do their market analysis, traffic counts, vertical IQ, IBIS World. So very expensive resources. We can provide them for free. What else? I was checking to see if Joanne needed me to cover anything, and she's blowing up my phone, but no, it's nothing that I need to cover. But anyways, yeah, so that's what we do. I cover Solon Park, Anthony, Valo, Verino, Mesquite. We are part of the higher education. So again, we're part of NMSU, DECC. I am an NMSU employee. So we have an office, and I can meet my clients at the Doña Ana Community College in Anthony, Chaparral, Solon Park, or at your place of business. Only place we cannot meet our clients is at the home base businesses. But other than that, that's what we do. Any questions?
Thank you so much, David. And we'll make sure that your information is sent out to all the business owners that joined today. So thank you everyone for joining. So again, the webinar today is focused on bookkeeping best practices. It's going to be what is gross receipt tax? And let me highlight Kate, who is going to be sharing about all of that. And again, it's recorded. It's going to be posted on our YouTube channel for MBDA. And yeah, looking forward. So go ahead, Kate.
Thank you. Thank you, everyone, for having me here. Sorry, I was in the process of trying to change my name because it has me listed under the wrong name. So I apologize for that if my picture is showing a different name, but I am Kate Odo. I am the owner of Odo Financial Services. We do quite a few things here in the community, but one of our main purposes is small business bookkeeping. So I'm going to go ahead and share my screen and start my presentation. It says that I have been restricted from sharing my screen. Sorry, guys. Can someone help me?
Can you try again?
Let's see. Oh, there we go. Okay. All right, just a sec here. Okay, great. All right, so the purpose of today's webinar is gross receipts tax. One of the common questions that I get from clients, or actually most of the common questions I get from clients, are related to gross receipts tax. And so I kind of divided this up into a two-part presentation to talk about gross receipts tax, how it varies from the more common sales tax, and what it means to our New Mexico businesses. Okay, just a little bit about myself. My name again is Kate Odo. I started my business during the COVID-19 pandemic to help support other individuals who wanted to start businesses but didn't know where to start. I have about 12 years of corporate accounting experience, and some of my immediate family and very close friends were hit really hard when our overall work processes changed during 2020 and 2021. So I started helping people start businesses, and that's really how I got into my current business and what I decided that I love to do. I currently partner with West. I partner with a local nonprofit called Three Sisters Kitchen, and also the Minority Business Development Office, to help individuals start businesses and to learn how to maintain the financial aspects of those businesses. We are very proud to be able to offer services to businesses at all levels. We tailor our services to fit the specific needs of our customers, our clients, and we try to be reachable no matter what your business budget is. Okay, so gross receipts tax is not the same thing as sales tax. And we talk about this to clients all the time. We work in several different states, but New Mexico is our primary state, and it's where we live. So we're very familiar with tax laws and regulations in New Mexico. We also work in other states. So business owners that work out of multiple states get very confused about the difference between a traditional gross receipts tax and a sales tax. So just an overview of what gross receipts are. So this is the total amount of money or value, not necessarily money exchanging hands, from any of these types of transactions in the state of New Mexico or that originate in the state of New Mexico. A lot of people don't understand that some even services that originate in New Mexico but are provided to outside localities also are considered part of our gross receipts tax guidelines. Okay. So the differences between gross receipts tax and traditional sales tax in other states are there's a few differences, but the main difference that I go over with clients is that a sales tax is imposed on the end user of the product, right? And the gross receipts tax is actually leveraged against the business providing the product or service. So whether or not we charge it to our customers or clients, it still exists and it still has to be accounted for and remitted appropriately. So that's the main difference between sales tax and gross receipts tax. A lot of businesses that come to me in initial stages of their business, believe that if they don't charge it, they don't have to remit it. And so that's a common misconception with our gross receipts tax process. Okay. Do we have to list it on our sales documents? So previously we did not, but as of July 1st, 2019, we have to state that it's there. So New Mexico Department of Taxation and Revenue gives us a lot of leeway as far as how we state the gross receipts tax and how our customers or clients see that on our sales documents. So I've listed a couple of examples here of acceptable gross receipts tax calculations and how those are stated on a sales document. So if you look on the left side of the screen, that receipt has a specific line item with tax, and it tells you the tax amount, subtotal before tax, and then the total of the bill. Okay, and that's perfectly acceptable. We can absolutely do that. On the right side of the screen, there is a line item, right? And then the total line item is that customer's total bill. However, this receipt says tax included. So that's perfectly acceptable. If you are in an industry, and I see this a lot with service industries, where your average customer does not know that the services are supposed to be taxable, and that can cause some sticker shock or some pushback with your customers, it's perfectly acceptable to add in the gross receipts tax as a line item, into your individual line items that you are selling or services that you're providing. And then you just have to put something on your sales document saying that tax is included in those overall costs. So a lot of my service-based businesses will do this. If it's not like a receipt like you see on the screen right now, if you're sending an invoice to customers or clients, you can absolutely put a message on your invoice that says gross receipts tax is included in the total cost of service or product. So that's totally acceptable. Whereas sales tax is always going to have a stated tax line. Gross receipts tax gives us a little bit of leeway as to how we interact with our clients in regards to that tax amount. And if it's okay, I'll just address all of the questions at the end of the slides, and we'll go back to all of the questions that are currently in the chat, because I see a lot of questions popping up, which is great. Okay, so what is taxable in the state of New Mexico? The short answer to that is almost everything. Just about everything we consume in terms of products or services is taxable in our state, okay? Now, having said that, there are over 40 exemptions to gross receipts tax on the books currently. So if you are in a specific industry like healthcare, if you are in farming, there's a lot of industries that may or may not, depending on their type of business, may not have to collect and remit gross receipts tax. So I strongly recommend that if you work with a professional accountant or bookkeeper, that you talk to them. If you don't have someone to ask these questions to, I would love to chat with you offline about what that looks like for your individual business. But having said all of that, just about everything that we consume here in the state of New Mexico is going to be subject to gross receipts tax. That includes services, materials, retail products, food that we consume in restaurants. Those are all subject to gross receipts tax currently. Here's some common exemptions. These are exemptions that we see a lot. And some of these, honestly, a lot of people don't know about, right? So of course, entities licensed by the Department of Health. So those are primarily healthcare providers, that their primary form of business is providing healthcare services. And that is very specific. So if you're in the healthcare industry, you want to talk to your professional about that. Receipts from selling livestock and unprocessed agricultural products like produce, vegetables, fruits. If you go to the farmer's market, there's a good chance that you're not going to pay gross receipts tax because those raw consumable items are not subject to gross receipts tax. Insurance companies. So your insurance premiums and your insurance agent is exempt from filing those. Also 501c3 entities and 501c6 entities are exempt from having to charge and remit those taxes. There's also some social, political, trade, and labor organizations as well. And then I put down here receipts of employees from wages and salaries, also commissions, but that doesn't qualify if you're a 1099 contractor. And we're going to talk about in a minute the way that some of those 1099 contractors don't have to charge and remit gross receipts tax. But that's important to know. If you're a 1099 contractor providing services to an entity, a business entity, then likely you will have to remit gross receipts tax on monies earned there. Okay. Do I charge all customers gross receipts taxes? So building a little bit on how 1099 contractors typically do have to remit gross receipts taxes, there are specific situations where that does not happen. So in this state, and there are other states that I do business in, and some of you may do business in, where you can have a blanketed sales tax exemption certificate. And a lot of states still currently do their processes that way, and whatever their rules and regulations are regarding that. We handle it a little bit differently here. We have non-taxable transaction certificates, and those are specific to one vendor at a time. So if you are not required to collect gross receipts taxes, you can execute an NTTC, a non-taxable transaction certificate, to your customer in order to have them not charge you those gross receipts taxes. This is done a lot in purposes of resale, so resale of services, resale of products. And that's just to prevent double dipping on the tax, right? So if I'm going to sell something to you and then you are going to resell it, there's no reason to charge that tax twice. So taxation and revenue allows us to only charge it on the end user side of the transaction. So I've listed some common types of NTTCs that we frequently use. Manufacturers will typically use a type 2. A lot of resellers will use a type 2. Type 5s are services that are going to be resold to the government. There's also, and I didn't include it in this slide, but there's also a resale of services that you can use if you are a 1099 contractor and you sell services to a business that's going to resell them to an end user. You can execute an NTTC that will allow you to forego the charging of those taxes. Sorry, I'm not sure how that got there. And to only charge it when it's being sold to the end user. We work with a lot of creatives. So if you are a web designer and you work with, let's say, a copywriter and a graphic designer and several other businesses that cooperate on the final product, you'll likely have NTTCs executed to you from those individuals or businesses that are providing the initial services in your product. And then you charge and you collect and remit the gross receipts taxes when that final product is sold to your customer. So that's generally how that works. There's also other NTTCs that only apply to the construction industry. And so if you believe that you should not be charging and remitting those gross receipts taxes, then I strongly suggest talking to a professional about how that applies to your individual business. So this is an example of an NTTC. This is actually an older one, and I blanked out some of the information for privacy. This is a type 2 transaction certificate. And basically, this is what it's going to look like. So we execute these online. In order to execute an NTTC, you need to get your the other party's CRS number. So when people are asking you for your CRS number, that is usually to execute an NTTC to your business. So the buyer is going to be the entity, the business that is purchasing the products or the services, right? And then the seller is going to be who would normally be charged with collecting that gross receipts tax and remitting it to the state. However, they're going to forego that as long as they have this on file, okay? NTTCs are executed online through your TAP portal. They don't ever expire. However, it is a good business practice to request a new one every year, and you will see that pretty commonplace is to ask for a new one on a yearly basis. So if you use the same vendors over and over again, you may be executing this time of year. In the beginning of the year, you may be executing an NTTC to them again. And a lot of that is just to make sure that the business entity and the tax ID numbers have not changed from year to year. So that is very common. So if you execute an NTTC, then your information is going to be over here on the left-hand side. And then the seller's information, who you're executing the NTTC to, is going to be over on the right. And there are specifics on the type of NTTC underneath all of the buyer and seller information on every NTTC. There's also a section at the bottom of this, which is your copy. Back when we used paper versions of these, very commonly we would detach that. It's really not needed any longer. And most of the time, even though they get a notification that you've executed an NTTC to them, you'll want to just go onto the TAP site, print a copy, and email it to your seller so that they have it, they can process it and take off any related taxes from your transaction. So this is just an example of what that looks like when you do that. Okay, so I got through this really fast, so we're going to have a lot of time to go over some questions. So how do you know the correct rate? New Mexico uses destination sourcing to determine what tax rate we use here in the state. So that can have a big impact on you if you are mobile in nature, if you travel to your customers, most service-based industries. And then also for businesses like myself, there's some very specific rules that you have to follow to know whether you need to use destination sourcing in your business to determine the tax rate. So that's actually the topic of the next training. And I will be going over that in much more detail, but this is just kind of a teaser to what the next training is about. So I got through my slides awfully quickly. Sorry, guys, I guess I'm talking too fast today. So I'd love to talk to you about your questions. I'd love to talk about what you are using in your business currently with gross receipts tax and what questions you have about how that applies to your business.
Okay, Kate, there is a couple questions in the chat. I'm not sure if you already addressed
I'm
it.
trying to pull those up now. Sorry, guys. Okay, let's go through the chat questions first. Okay, so, okay, yes, slides are going to be available after.
If there is one that says, if I make a sale online outside of New Mexico, can I still charge them tax?
So that depends on a couple of things. So gross receipts tax, likely no. If it's a product, then you don't have to charge gross receipts taxes on the sale of the product. However, you may have a physical or economic nexus in the state that you're shipping to, and that usually depends on a few different factors. Most of the time it has to do with sales volume in the receiving state, so you want to be mindful of that. And then some services that are provided in New Mexico and used outside of the state are subject to gross receipts taxes. That can include certain professional services. And so you want to know whether or not that applies to your specific business. Definitely talk to whoever helps with your accounting or bookkeeping about that. Let's see. As a jeweler, can I get an NTTC when buying materials from supply source? Absolutely. Okay, so if you are purchasing even from an out-of-state seller, if they have a responsibility to charge gross receipts tax in New Mexico because they do enough business here, then you definitely want to execute an NTTC to them. So if you're a jeweler or an artist, you're probably using these raw materials to manufacture a product, to create a product. And so those components that go into that product, those would be non-taxable based on what you've said, yes. So if you have an in-state supplier, they should absolutely know how to handle your NTTC. If it's an out-of-state supplier, it may be a little bit more difficult, but they should honor that non-taxable transaction certificate based on you reselling the product. So if you have any issues with those, I've worked with a lot of restaurant suppliers nationally, and you usually just have to get to the right person, or sometimes you'll have to call them and talk to their tax department, and they'll have someone who specializes in other states' tax rules and regs. So that's a great question. I'm not sure about Sandra's question. Can someone help me?
Yeah, that's not a question. That was a response for another person. Yeah, no worries about that.
Okay, all right. Does anybody else have questions that are outside of the chat? Anyone have run into anything in their business that they're not sure about? Anyone else have anything they'd like to know? No? Getting crickets here. Okay. Oh, there we go. Okay, so if you log into your TAP portal, this is Doris. To execute an NTTC, you first have to have authorization to execute NTTCs. So when you log into your TAP portal where you file your gross receipts tax filings, you are going to click on your gross receipts account, and then you're going to click on NTTC options. So the first page that comes up for you is going to list the type of NTTCs that you qualify for. And this is based on the business type that you gave taxation and revenue when you registered. Now, some of us change business types or maybe the types of services or products that we offer while we're in business. So you can update that by, if you don't have the specific type of NTTC that you need, you can request authorization, and it will ask you for some information about what type of NTTC you're requesting access for. Once you have that authorization, then you should also have a section of that page where it says buyers or sellers certificates. If you are purchasing products or services and you need to execute the NTTC, then you're going to be the buyer and your vendor is going to be the seller, and you're going to execute it to them directly. I hope that helps. Okay, Jessica asked, out-of-state customers, when and how do I determine if they are taxed? We provide services at our end, but the product is the report we send our clients. I am the accountant for our business, but I come from a different state and that functions much differently. Okay, so generally speaking, most services that are provided out of state, but the service is provided here, right? So the service originates in New Mexico, are generally subject to gross receipts taxes. And there is a document, if anyone would like for me to send the state FYI document that explains every service and product that is subject to gross receipts taxes, I'm happy to share that. I have that downloaded and I share it with clients all the time. So Sophia or Gabby, if you wouldn't mind sharing that with the group, that would possibly be really helpful for some of these guys as well. Let's see, did you say that if a 1099 provides products or services to a nonprofit, they can become exempt from GRT by filing an NTTC? So if you are providing services to a nonprofit or products to a nonprofit, now it depends on what those products are and what their use is, but it is possible that you would not need to charge or remit gross receipts taxes on those. So you would want to talk to the nonprofit that you're working with and what the scope of your work with them is. If they're going to be reselling this in some way, then that would be a resale of services. But if they are just claiming a complete exemption, then you would want to have them execute that NTTC to you because you are the seller in that situation. Gabriel, is it common in the fitness field, personal training studio, to pass on gross receipts tax to clients? If so, how do I determine how to incorporate that into the sale? So yes, in some way, you're going to be passing it on to clients, right? So you're either taking it out of your bottom line and taking less revenue on that sale, or you're putting it as a specific line item. For your industry specifically, I don't know what the norm is necessarily, but if it's something where your clients are going to potentially be wanting to go somewhere else or turned off by the tax line item, you can absolutely just put it into the cost of services that you provide them, just one specific line item, sales, and then you can just put that disclosure on your invoice or your receipt that tax was included. Some clients will say something like, any applicable taxes included in the cost of services. So if there are applicable taxes, those are included in the individual line items. So you can say something like that, and that helps with your client relationship there. Okay, Lilia, all right. Do I charge tax for international to customer? So Lily, are you shipping products to an international destination? Can we clarify that? Do you mind typing that in the chat? Canada. Okay, so you don't need to charge New Mexico gross receipts tax for products that you're shipping out of country. Okay. Oh, this is a great question, Susan. Can you discuss when a business that does R&D to develop a product is exempt from gross receipts? Okay, so the tax law specifically states that research and development services or products are subject to gross receipts tax when the initial use of the service or product occurs in New Mexico. So basically, if you develop a product or service here, research and development, and it goes elsewhere for an additional work, but then it's used here in New Mexico, then it is subject to gross receipts taxes. But if the product or the service is just going out of state and stays out of state and does not have any use in our state, then it would be subject to the gross receipts tax laws regarding services and products, right? So you wouldn't have to charge it on a product if it's going out of state and staying out of state. But if it's a service, then yes, it may be subject to gross receipts taxes depending on the type of service. And that would just be the state amount based on it being provided first here and then traveling out of state. I hope that makes sense. David said, like if the tree was chopped down in New Mexico and they created a table from the tree, then New Mexico GRT is charged. So if the product is being shipped, if it's being built here, if that table was made out of a New Mexico tree and it was shipped elsewhere, sold in another state, then that is subject to that other state's gross receipts tax or sales tax. There's only a few other states that have gross receipts tax, but gross receipts tax or sales tax laws. If it is being first utilized here, then that's different. Gabriel said, I have a client, I do online nutritional coaching, lives in Mexico. Do both sales and gross receipts tax apply in this case? Sales tax is generally not on services. So it would depend on the destination. As far as international rules on services, I would have to get back to you on that. I am not an expert on how it relates to international sales, but I can absolutely research that and get back to you on that. Gabriel, if you want to reach out to me, I'm happy to talk to you just one-on-one about how that relates to your business. Absolutely. Fran says that's called destination taxes, correct. So yes, we use destination sourcing here in New Mexico. Not all states use destination sourcing. So if you are shipping a product to another state, it's going to depend on their rules and how they determine where the sales tax is charged. Derry says, I sell a turquoise ring to someone in California. Do I charge them taxes? Do I still get charged gross receipts taxes? No. So if you sell a product and you send that product to another state, you have to take into account that state's rules. So you would have to determine if you have to charge California sales tax. I know California also uses destination sourcing, but you don't have to charge sales tax in California unless you meet the revenue and the physical requirements for having to charge their sales tax. So if you're shipping a one-off ring to somebody in California and you will never sell in that state again, then it's likely that you don't have to collect sales tax or worry about that. You definitely do not have to collect gross receipts taxes on that ring. Does that help? Okay, so that's the end of the questions, unless anybody has any follow-up. David said, you don't get charged gross receipts tax, you are charging the client for gross receipts tax. Yes, so you're really just the collector of the taxes, right? You shouldn't be paying the taxes because you should be paying that or adding that onto the cost that your client or customer is paying. However, in some cases, like I said with Gabriel's question, adding that into your line item, you can increase the cost of your line item, or you can just leave your line item the same cost and you can take that out of your revenue. Either way, you're the one who has to remit it to the state, right? So David, that's sort of correct where you are charging it, but even if they don't pay it, as the business, you are still responsible for it. So that's the main difference again between sales tax and gross receipts tax. Sales tax is always leveraged against the buyer, right? Gross receipts tax is leveraged against us, the sellers, right? I am a service seller. Some of you sell products, some of you sell services. You are responsible for the gross receipts tax. So if your customer or client doesn't pay it, you still have to pay it out of your receipts, your gross receipts for that sale. Yeah, and David says it's important to collect that from your client and report it. It's so important to collect it because then that means it doesn't come out of your bottom line, right? If you absolutely have to take that tax line item off of your invoice or your receipts, you can add the tax in to the cost of the item or service. That way, you're not out the money for gross receipts tax. I hope that helps. Okay. Yeah, so we have a few more minutes. If anybody else has any questions, if not, I'd love to chat with you offline if you have more specific questions. Sorry, I'm Kate. It's stuck on Dania. I don't know why. I tried to change the name, but that's my assistant, so I apologize. But thank you so much. I appreciate all of you guys being here and listening to me chat about something that I think is really fun, but you know, it's not everybody's thing, and that's totally fine. Thanks.
Well, it seems like there's no more questions. So great. Thank you so much, Kate, for the presentation. Really, those topics are always useful. You know, it's great information. And there's always new questions that can come up. So just a reminder to all the businesses and the community partners that are here today, you can send me an email and if you're interested in getting a couple hours one-on-one with Kay, it's kind of like a consultation services that MBDA is covering. so you don't have to pay for those couple hours. So if you're interested on that, please send me an email. I will send you what are the requirements for that. And yeah, just that. Okay, take advantage of that 101 with Kay. Okay, you're on mute.
Sorry. Thank you very much for having me. It's been a pleasure.
Yeah, thank you. So great day. Have a great day, everyone, and see you next
Thank
week.
you.
Thank you
Okay,
guys. Have a good
bye-bye.
one. Bye bye.